Views expressed are solely those of the speakers and do not represent this show or its team.
The market's heating up. Supply is growing. Rates are stabilizing. If you're thinking about it, don't wait. The best time to buy, was 2 years ago. The second best time is now.
Yep.
Interest rates could move. Pricing could move. Inventory could tighten. The window's open. You need to get educated, run your numbers, find your property. Don't overthink it and do it.
Welcome to the show. I'm your host, Wade Lopez, and today I'm joined by a close friend and business partner, Reece Milton. Reece is the developer for Hickory Hill at the Holt Homestead, a luxury townhome community in Sevierville, Tennessee, and one of the sharpest real estate minds I know. Reece, welcome to the show.
Thank you, Wade. Glad to be here.
Yeah, so here's what prompted this conversation. Most people looking at real estate right now are stuck. Mortgage rates are still above 6%. Home prices nationally are flat. The traditional buy and hold residential model is not penciling the way it did 3 years ago. And a lot of investors are sitting on the sidelines and wondering where the opportunity is. The answer, at least for a specific type of investor, may be sitting at the base of the Great Smoky Mountains. The Smoky Mountains region generates more short-term rental revenue per available property than any other STR in the entire United States. Sevier County alone generated $3.93 billion in visitor spending in 2025. The Great Smoky Mountains National Park draws more than 12 million visitors a year, consistently ranking as the most visited national park in the country. And right in the middle of that market is a project we have both been deeply involved in. Today, we're going to pull back the curtain on what the short-term rental market actually looks like, what investors should be looking for, and why we believe Sevierville specifically is one of the most compelling opportunities in the country right now. Reece, before we get into the details with the big picture, for someone who's never thought about short-term rental investing, what is the single most important thing they need to understand about how it works and why it's different from every other real estate strategy?
Wait, it's a good question right off the bat. It's not a rental, it's a business, a long-term rental. You sign a lease and your income is capped by the day you sign.
Yep.
Here's a property earns night by night, and guest experience drives the revenue. Better property, better operation, more money. Run it like a business, and it outperforms everything else in real estate. Treat it like a rental, and it eats you alive. That's the whole game.
Well, let's talk about the purchase to rent model, because I think there's a lot of confusion about what it actually means, right? You just brought it up. The basic premise is straightforward. You buy a property with specific attention of platforms are using like Airbnb and VRBO rather than placing a long-term tenant inside, right? Instead of one check a month, you're generating nightly revenue at rates that are driven by demand, seasonality, and how well the property is positioned in the market. In Sevierville, that market's substantial. There are over 13,000 active short-term rental listings in the area. Average annual revenue, depends on what system you use, between $50,000 and $35,000. Peak months like July can generate over $7,200 in a single month. Professionally managed properties in strong locations regularly run 62 to 75% occupancy, and the top quartile properties exceed 80% during peak season. That's a very different revenue profile than a residential rental. And it comes with a very different management profile too. This is not a passive investment by accident. You have to treat it like a business. So Reece, walk us through the purchase to rent model from the beginning. What does the decision process actually look like for a first-time STR rent person? And basically, let's touch on the mistakes people make before they ever close on a property.
Hey, man, the orders matter. Market,
Yes.
rules, numbers, then the house.
Yes.
Most people run it backwards. They fall in love with the property and try to force the numbers to work. The biggest mistake I see is buying on projections. A listing will show you what a property could make on its best year. I want to know what it actually made. Real bookings, real dollars. Buy on what it did, not what brochures say it might do. Second mistake is not having your operating plan before closing. Yep. Who cleans it? Who manages it? What's the furniture cost? A unit sitting empty for months while you shop for a couch is burning your first year's return. Right? The house is the last decision, not the first one.
Yeah. So one of the biggest things I hear, and heck, you hear it from me, is I don't want to deal with management headache, right? How do you respond to that? Tell people how you put me down on that. How you make me, that was my biggest fear when we entered this is, hey, what about, how do you know the good from the bad? Help people understand that.
Well, it's real, but let's be honest about the word passive. I mean, nothing with guests in its full in it is fully passive. I mean, good management gets you to probably about 85, 90%. They handle the bookings, the cleanings, the 2 a.m. hot tub call, if you will. You
Yep.
handle the decisions, pricing, approvals, uh, big repairs, when to reinvest. Where people get burned is hiring cheap management.
Yep.
In this market, the difference between a good manager and a bad one, well, it's going to show up in your occupancy, your reviews, and your nightly rate. That fee is not a cost. It's the thing protecting your asset. So
Yep.
yes, you can own one of these from Cincinnati and never touch a mop, but you're still the owner of a business.
Yep.
15 minutes a week, not zero.
I guess the question is too, should you be involved? Right? Does the owner still need to be more involved than people realize?
Oh, absolutely. I mean, the owner has to stay involved constantly. I mean, it is a business. I mean, it's important. It's your livelihood. And, you can grow and make them bigger. We've got people that own 2 and 3 and 4, 5 different units. So it's certainly that way.
Yeah, I think the data shows ADR revenue scales significantly with the property size. Like a one bedroom in Sevierville averages around 35,000 a year. A 6 bedroom property can generate over 141,000 annually. How should investors think about the relationship between acquisition costs, property size, and revenue potential when they're underwriting their model?
Yeah, it's tough there. There's a lot of emotion in this, but bigger revenue doesn't mean bigger returns. I mean, a 6 bedroom makes more money, sure,
Yeah.
but it costs more to buy,
Yep.
more to furnish, more to manage. A 3 bedroom in the right market does better cash flow than a 6 bedroom in the wrong one.
Every
Look at
day.
your actual return on your actual dollar spent.
Yeah.
That's the
Yep.
only number that matters, not the
Yep.
gross revenue, your
Yep.
return.
I agree. So when you look at the STR market in Sevierville, it's grown over 149% a year in terms of listing count, which is absolutely extraordinary. That's also a signal worth paying attention to. How do you think about supply growth as an investor? And what does it take to differentiate property in a market that's getting more and more competitive?
Yeah, it's a good question too. Supply matters, but it's not the whole story.
Yeah.
What matters is does your property stand out? Better furnishings, better management, better guest experience, right? I mean,
Yep.
a property that's professionally run, clean, responsive to guests,
Yes.
that books. A property that's neglected, it sits. In a saturated market, the difference between performing and struggling is execution. You
Right.
can't control supply growth. You can control how your property shows up. That's the differentiator.
I agree totally. Let's talk about, there's plenty of places to buy a short term rental. I mean, you can talk about Florida coast, you can talk about Texas Hill Country, the Outer Banks. So let's talk about why Sevierville and why now. The real foundation is demand, right? It's more than 12 million people visit Great Smoky Mountains National Park every year. The surrounding attractions are Dollywood, Douglas Lake, Gatlinburg, Soaky Mountain Water Park. They draw visitors throughout the year, 12 months a year, right? Maybe not the water park, but even the lake draws visitors because Tennessee has that area that the lakes don't freeze over like they do in other areas, right? So yeah, that year round appeal. So Tennessee offers a different regulatory and tax environment as well. Acquisition costs remain well below many comparable markets, and especially it shows up in the Air DNA score, right? I think Air DNA has Sevierville currently 80 out of 100 for investability, and the red par is up 6% year over year. So, Reece, from when you watch this market from inside for years now, you're there. What does Sevierville offer that's comparable mountain markets like Asheville or even the other Blue Ridge markets in my home state, Virginia, don't?
Well, you've got the Great Smoky Mountains National Park, and Sevierville is very close to Great Smoky Mountain Park. You
Right.
know, you mentioned a lot of several attractions, and those are very, very important, I think, and we're just minutes from those. But we have year-round demand,
Right.
newer inventory in Sevierville, better occupancy numbers. Your acquisition cost is lower, your cash flow is higher.
Yep.
Tennessee doesn't it doesn't tax wage income, so you're keeping more. That's the edge.
Yep. Exactly. And Sevierville's interesting, right? It sits in a triangle with the Smokies. It's close to McGee, Tyson Airport. It's close to Gatlinburg, right in Pigeon Forge, where this is located. Basically, it's on the flat side of the mountain. It has its own dining scene, has Douglas Lake, like we talked about, and newer inventory that commands higher average daily rates than older stock in Gatlinburg. At least that's how I see it. I know that's what we talked about. How do you explain Sevierville as an advantage to someone who automatically defaults to Gatlinburg when they come to talk to you about the Smoky Mountain and what it has?
Well, everybody has their own little place, right? I mean, Gatlinburg is a default, Pigeon Forge is a default, but everybody knows it.
Right,
In
right.
Sevierville, it's got better economics and it's better access. You're 20 to 25 minutes from Gatlinburg and not in the traffic. Less than
Yeah,
6 to Pigeon Forge,
yeah,
less than 4 to downtown Sevierville.
yep,
Your guests can do all that stuff, but they're
yep,
still staying in a quieter market with better cash flow.
yeah.
Newer inventory, higher occupancy, lower acquisition costs, all of that. Sevierville's a smart play, not the crowded one.
Right. And it's also near a hospital, right?
Yes, there's a hospital nearby. We've got the high school that's close by, the elementary school that's close by, grocery stores. I mean, and literally, I say all those things together, but they're all within a mile and a half, 2 miles from where the project is, Hickory Hill.
Let's talk about seasonal pattern because I mean, you think about it, the fall foliage from mid-October through early November is the single busiest window, but summer is high occupancy. But even January and February become a demand floor that a lot of beach markets just don't have. Right? How does that year-round profile change how people should think about underwriting a property here?
Well, seasonality matters, but Sevierville is not as brutal as other markets.
Right.
Fall foliage, mid October through early November, that peaks. Summer's high. January and February slower, but not dead.
Yep.
You model conservatively, all right? Don't assume peak rates year round.
Hmm.
Build your underwriting and average occupancy, not best case. A property that does 50,000 a year in revenue, that's your number.
Yeah.
Play around that, or
Right.
not play around that, but plan around that.
Yeah.
If you get the shoulder seasons and winter bookings better than that, you're ahead. But don't count on it. Conservative underwriting keeps you safe, right?
Exactly. So, what does someone need to understand about the regulatory environment in Severe? Because specifically, that's a big deal, right? So you got to think about that. So walk us through the permit process, the occupancy tax structure, and what are one or two things that an out of state investor might miss?
So Tennessee law prohibits municipalities from banning STRs. So you're protected there. But
Yep.
Sevier County has three strike policy: noise complaints, trash violation, and parking issue.
Right.
Three strikes and you lose your permit. That's real. So your management has to be tight. Good guest screening, house rules enforced, turnovers done right. Occupancy tax straightforward, collected and
Yep.
remitted.
Right.
The thing investors miss is thinking permits are passive. They're not. You've got to actively manage compliance or you lose your license.
Right.
That's the one thing.
Yep. All right. So let's talk about Hickory Hill specifically. And before we do, I want to disclose that I am personally invested in the development. So I clearly believe in the project. All right. Hickory Hill at the Holt Homestead is how many units exactly? I know the plan changes a little bit as square footage moves around and amenities move around, but what's the anticipated amount that you think Hickory Hill will end up with?
We'll have 139 total units in this project, and it's already pre-approved for those numbers.
Right.
Now, as a PUD unit, planned unit development, we have the opportunity to relocate and position things, and
Yep.
I'm one of those guys. I have visions. I can get it on paper when I'm standing out there in the field. I can see it.
Right.
But it doesn't mean I'm not going to move it some. And you know that as well as I do. And a lot of my
Yeah.
clients do too.
Yeah.
I put it exactly where it needs to be. And sometimes that means that we may not have as many as we thought we were going to have. We might have 138 or 135. But
Right.
our goal is to maximize the project and make sure everything fits perfectly.
So we're talking about basically, I'm gonna round number here, 2,000 square feet, 3 bedroom, 3.5 bath, designer furnishings. It's basically resort style amenities, right? It's gonna eventually have a pool, splash pad, clubhouse, and outdoor entertainment spaces. So unlike many of these, as I call them, older cabins in the Smokies, Hickory Hill, was built for a purpose of short-term rental, right? The goal was to provide a turnkey property with consistent maintenance, built-in amenities, and a more predictable guest experience, which to me is important, right? We talk about that. So, what makes a purpose-built community like Hickory Hill different from buying a traditional cabin in the Smokies?
Well, Wade, I've been in the building business for over 38 years now. And I've built cabins for years.
Right,
I know what they are. They're scattered, weather exposed, and maintenance never stops.
right,
Deck rock trees down, power lines down during storms, crazy access roads. I built hundreds of them. I
yeah,
also know most STR investors don't want to own that I just specified.
yes,
They want to own cash flow, not a second job. And what I
right,
just mentioned is a second job. So we
absolutely,
said, what? Yeah, what if we build townhouses instead? Clustered. HOA handles exterior, owner manages the guest experience. Furnished from day one and Airbnb ready at closing. No
yep,
6-month waiting game. We built for the operator at Hickory Hill, not the cabin flipper. That
right,
decision shaped everything.
yep. So, Reese, walk us through the origin of the project. What was the gap in the market you saw, like you just discussed a little bit earlier in the development process, that shaped what Hickory Hill has now become?
Yeah, so most, and going back on the cabin thing, most investors buy a cabin in this area or have in the past. It
Right.
sits it sits 6 months while they furnish it, hire a manager, and then set up the listing.
Yep.
Revenue start trickling in probably month 7 after they've been out here picking all the pictures out and getting the linens and the coffee maker and whatever. Look,
Yep.
we do all that before closing. You own it.
Okay.
Day one,
Yep.
and you're on Airbnb making money. That's
Yeah.
compressed timeline. I think that matters to investors.
When you get an STR that's ready, I mean, some people like, you look at something and they'll have a showroom like, hey, here's our model to look at. But these aren't models. These are fully furnished STRs, right? Revenue kicks in on day one. What kind of difference does that make to an investor in their pocketbook in the first 12 to 18 months?
Well, I think it's huge because again, so many people are out here trying to put the cabin together. So the revenue starts trickling for those units in month 5, 6, 7. We do all that before the closing.
Right.
Day one, and you're like I said, you're on Airbnb making money.
Yeah.
That press timeline matters to investors. They're not waiting. They're earning. Um, and if you think about over 5 years, that's a massive compounding difference.
Yep.
Month 1 revenue versus month 7 revenue, that's the edge.
Yep.
And I wanna add something to that.
Yep.
Turnkey is not luxury. It's economics.
Good statement. I like that. So let's talk about this $46,000 STR conversion package. That's a big deal. Explain what the package includes, what it does for unit's revenue position, and why the economics of that investment makes sense from a guest experience standpoint.
Wade, the 46 grand covers everything, and I don't know how to, get everybody to understand what that everything is. I mean everything. You can move in that night after closing. So furniture, appliances, hot tub, arcade games, linens, kitchenware, all of it. Guest ready.
Towels, everything.
Yeah, yeah,
Yeah.
yeah. But here's the thing: it's
Yep.
not just about looking good.
Yep.
A furnished property commands higher nightly rates, right? A guest walks in, sees design, sees quality, sees thought, they'll pay more and they'll leave better reviews.
Yeah,
Better reviews drive occupancy, and
exactly.
higher rate plus higher occupancy equals real money.
Yeah,
The package isn't a cost, it's a revenue engine.
yeah.
That's the economics.
Makes total sense. So for someone sitting in the audience right now who's a who they're thinking about it, contemplating, or they're somewhat, or even seriously interested, what does the purchase price look like? And what are the price points that, what does financing typically look like for an STR property? And what should they expect in terms of a timeline from contract to first booking?
So the interior unit is 605 grand. In unit is 635.
Hmm.
Both come first.
Right.
Financing is through our preferred lender. 45-day close. At closing, you've got the keys to a fully furnished Airbnb ready property.
So that includes the 46,000
Includes a
all.
$46,000 fully furnished linens, whole 9 yards, ready to move in. And
Wow.
typically, what we're seeing, those first bookings come within the first 2 weeks, not the 7 months that we talked about earlier, while
Yep. Yep.
all these other people out here that are buying these units trying to
Yep.
furnish them themselves. And, that's it. Own it and earn it.
Let's think bigger picture here and let's pull back from specific, just the specifics of Hickory Hill, and let's talk about what every short-term rental investor needs to get right, regardless of where they're buying. Because here's the thing, the Smoky Mountain market is strong. The fundamentals are real, but strong markets don't automatically produce strong returns. What separates an investor who builds a genuine passive income from someone that ends up with a problem property that is almost, you know, never the market, right? It's the decisions made before and after the purchase. So, Reece, what's the single most important underwriting metric for a short term rental investor? I'm not talking about the metric everyone talks about. I'm talking about the one thing that predicts whether a property performs or not.
Well, everyone fixates on gross revenue, and that's not it. What matters is cash on cash return on your actual dollar invested. You put
Agree.
in 100 grand. How much comes back to you year after all costs? That's the
Yep.
number.
Yep.
A property doing 80 grand of revenue might net you 8 grand after mortgage, taxes, maintenance, and management. But 8% on 100 grand, that's your actual return. Build your model on that, not occupancy percentage, not
Right.
nightly rate, and most certainly not on gross revenue.
Yeah.
Your cash
Absolutely.
back. Your
Absolutely.
cash back. That's what we're talking about. And
Yeah.
that's the only metric in my mind that
Yeah.
matters.
Yeah. Exactly. But what you can actually go to the grocery store with, right?
Right.
Property management is the variable that most investors underestimate. The difference between a self-managed property and one that's just not, is not just time, right? It's occupancy, it's pricing, it's optimization, like you say, review scores, and repeat guest rights. What should an investor look for when they're evaluating a property management partner in this type of market?
I would say communication and attention to detail. A good manager responds to guests fast, handles turnovers tight, and keeps
Right.
the property clean between the bookings.
Yep.
Um, they track expenses. They optimize pricing. A bad manager lets things slide. Guests complain, reviews tank, occupancy drops. Yeah, I'm sure they feel it in their bank account.
Absolutely.
I think people should interview if when they're doing this, they should interview multiple managers, and certainly ask for references from other owners. And having Airbnb with us is a great thing. Now you have the opportunity where you can check their actual reviews on Airbnb. So don't hire cheap. You get what you pay for. A good manager protects your asset. A bad one destroys it all.
So you talked a little earlier about this three strike policy in Sevier County, and then that's real, right? Three documented violations, noise, trash, parking, and you can lose your permit forever. So that's an existential risk for the investment. How do you build the guest experience, the management protocol to make sure that never happens?
It's real and it's strict. And again, 3 strikes, you're out. So your management protocol has to be airtight.
Right.
Guest screening, I feel like guest screening up front and house rules on day one, and then of course quiet hours enforced. Those are probably the top three that are the most very important.
I guess the main thing is, I think it's a good thing. Yeah, I really do. I mean, it's not. It's a good thing, especially the other thing we haven't really talked about is having a good HOA. That's very important as well, right? So I think that helps police some of that.
I think too, just to add to that, turnover is done fast. You don't want trash piling up.
Right.
Parking designated and communicated. You don't want people parking up on the curbs and in the grass
Yep.
and in the flower beds out in front of
Yep.
your unit. I mean, it's
Yep.
not complicated. It's discipline. You
Right.
brief your manager on this before closing, right? And if they don't take it seriously,
Yep.
you find a different manager.
Yep.
It's that simple. I mean, compliance is not optional. It's the
Right.
cost of doing business here. You get it wrong and you lose the whole deal, Wade.
Yeah, absolutely. So if you could go back and tell yourself one thing before you bought the first short-term rental, what would it be? And I mean the thing that you actually wish you known, not the polished version.
I mean, I can hit that right off the bat. Do not buy on emotion. Buy on the numbers, man. Buy on the numbers. Run the math 3 times. Run it 10 times.
Yep.
Talk to the owners who actually own them, not just brokers selling them. I mean, they're in it for a living, right? They're
Yeah.
selling to make money, and
Right.
no point
No
intended, no pun
disrespect.
intended.
I understand. Yep. Yep.
Brokers are selling them.
Yeah.
So expect turnover costs to be higher than you think. Expect guests to damage things. Expect management to be harder than passive income sounds.
Yep.
And understand that you're running a business, not collecting real estate.
Right.
That's the real version.
Yeah. Reece, let's bring this home. We've covered the purchase to rent model and how it works, why Sevierville is one of the most compelling SDR markets in the entire country, how Hickory Hill was built to serve that investor, and what every investor needs to get right before they pull the trigger. We end every one of these podcasts with 3 pretty difficult questions, okay? And you don't get off the hook either. So, Reece, what's the single most important thing that matters right now for someone seriously considering a short-term rental investment in the Smoky Mountains?
Yes. Hey, move fast. The market's heating up. Supply's growing. Rates are stabilizing. And they're not handing out any more water sewer. I mean,
Yeah, that's
we're
true.
locked out right now. Yeah, until they finish the new plant, that's it. So what you
Yep.
see is what you got until it's done, until they release more
Yep.
permitting. But
Yep.
if you're thinking about it, don't wait. The best time to buy, was 2 years ago. The second best time is now.
Yep.
Interest
Agree.
rates could move, pricing could move, inventory could tighten. The window's open. You need to get educated, run your numbers, find your property. Don't overthink it and do it.
So what are you watching most closely in this market over the next 6 to 12 months that every investor in this space should have on their radar?
I would say supply growth. We're adding units fast, and look, not all of them will perform.
Right.
The ones that do will be the ones that are well managed,
Yep.
well furnished, in
Yep.
the right location. Look, again, Gatlinburg's saturated. Sevierville's got runway. I'm watching to see if the rates stay flat or drop. Rate drop changes the buyer pool. I'm also watching to see, who stays serious about management and who cuts corners. The operators who stay disciplined they'll outperform. The
Mhm.
ones who get lazy, they'll struggle.
Yep.
That's
Absolutely.
the spread I'm watching.
So, final question. What's the one mistake you see this market over and over again that you kind of wish they would just stop making?
I would say buying on projections again, and I think we touched on that a little bit before.
Yeah.
I would say buying on projections instead of
Yep.
what it actually made.
Yep.
An emotion. A
Yep.
listing shows you best case scenario. And I know your dreams, your blue sky and your mind show you your best case scenarios, but
Right.
those aren't always true.
Yep.
Nobody shows you the worst case. Investors see the marketing number and fall in love, and they close and reality hits, right?
Yep.
The property underperforms, management is messier than expected. Guests are harder to get than they thought. Uh, I think you should buy what similar properties actually made, not what the brochure says they could make. I
Right.
mean, that's it. Stop
Yeah.
buying on hope, right? Buy on
Yeah.
data.
Yeah. And with, I would call it reputable people.
There you go. Exactly right. That's exactly
Okay.
right.
All right. With short-term rentals, we can all agree on for everyone. They require, more involvement than a traditional investment and a willingness to think like an operator, not just a property owner, right? But with the right investor, the right property, and the compelling part of a broader real estate strategy, I think it makes a lot of sense for a lot of people. And Sevierville offers a combination of demand, accessibility, year-round appeal. It's difficult to find anywhere else. If today's conversation has you seriously considering whether a short-term rental belongs in your portfolio, visit hickoryhilltn.com. That's hickoryhilltn, like the abbreviation for Tennessee, hickoryhilltn.com, one word, or reach out to your advisors at Concord Wealth Partners, and we can certainly help you evaluate that opportunity within the context of your overall financial plan. Reece, great conversation. I really enjoyed it.
Thanks for the invite, Wade. Enjoyed it. I hope to be back soon.
Lastly, if you enjoyed today's conversation, please like the episode, share it with a friend or a colleague, and subscribe so you don't miss what's coming next on Built to Last. See you next time.
This podcast is produced by Concord Wealth Partners, LLC, an investment advisor registered with the Securities and Exchange Commission. Registration does not imply a certain level of skill or training. The information presented is for educational and informational purposes only and should not be construed as personalized investment, financial, tax, or legal advice. Nothing discussed should be considered a solicitation or offer to buy or sell any security or investment product. All investing involves risk, including the potential loss of principal. Past performance is not a guarantee of future results. Individual results will vary based on personal financial circumstances, risk tolerance, and other factors. Concord Wealth Partners does not provide tax or accounting services. Tax and accounting services are offered through Concord Business and Tax Advisory, an affiliated CPA firm. For more information about Concord Wealth Partners, including our Form ADV Part 2A and Form CRS, please visit concordwealthpartners.com or contact us at 800-838-4370.